Hello to you. This is At the Open. I'm Brooke Cordy, just 1 hour away from the new trading day. We're shifting up a gear on the Business Channel. Here's some of our expert guests that we've got lined up for you this hour. Aliom Financial's Simon Mariner on what's behind the U-turn that we've been seeing really in the US and European markets in the past couple of weeks. Simon Mariner, let's bring you in from Aliom Financial Markets, and Simon's at our Sydney studio, Sydney CBD studio. You know, just when you're listening to Chris there, Simon, it just feels like we've done somewhat of a U-turn from the last couple of weeks. So, you know, Chris was talking about all the positive sentiment around the optimism and, of course, all this talk about earnings season. Have we seen a U-turn?
Well, I think there's a marked shift in sentiment. You know, just some weeks ago we were talking about all these bearish signals, both fundamental and technical. We were talking about frightening things called death crosses and the like. And it's interesting, you know, investors will see what they want to see depending on their mood. You know, if you've only got a hammer, then everything starts to look like a nail. It seems that that's turned around quite significantly, as Chris mentioned. I think US and Euro markets having 6 straight days of gains. Last night on the Euro stocks, a significant thing for me was all 19 industry sectors all posting a positive gain. That is a big signal that the investors are starting to sort of see the markets returning to normal. One big caveat though, and I think you really can't underdo it, and Chris did mention it, is volumes are very, very light. They're crazy light. They're crazy thin. It's seasonal. It's traditional. You know, it's holiday season in the Northern Hemisphere. People are going away on holidays. They don't want to be concerned about, you know, fund managers, brokers. They don't want to be concerned about having positions in the market. And they've also been closing up or screwing up their books going into a clean June 30 result. And last of all, you know, US earnings season, you know, it can make the market a bit choppy, a bit volatile. I think, you know, no one wants to step in and be a hero right now. So just to finish up on that, yes, marked shift potentially, or U-turn as you call it, in sentiment. That will only be confirmed over the next few weeks as some of those volumes start to come back in, and we see it continue.
Yeah, I'm pleased you put that, and you did, Simon, flag, you know, just last week what the chatter had been. I mean, fundamentally, the argument hasn't shifted. Unemployment still in double-digit territory in the US. I mean, you can crow all you like about, you know, margin growth, but it's largely happening, you have to agree, with offshore sales going through the system. Certainly the world's largest economy still weighed down.
Look, if you're depressed, then the sky looks grey. If you're optimistic, then the sun's shining. And you know, a lot of this stuff is based on fears. And a lot of these technical patterns, you know, for example, that death cross again, they're the potential for it to go bad, but it takes a trigger. It takes something real, an actual event. You know, it actually takes a thunderstorm or some rain clouds to actually say, look, this is going bad. So it's quite interesting. There were plenty of really good bullish signals that were being ignored. You know, the euro was going up. Just last night, again, the euro surges up. You know, over $1.27.
Yeah, but there is no signal on interest rates other than the one lone dissenter in the US, Honig, who says put them at 1% and leave them there. Yeah. If the economy was gangbusters, they would be raising rates like they are in Australia, like they'd be wanting to do in Canada and South Korea.
Certainly, and look, I don't think anyone's saying the economy's gangbusters. I just think what they're saying is you know, the economy's not down the U-bend. So you know, and I think time and time again we've seen fears of things going wrong, and disasters have, you know, not been averted. They've come round. Look at Greece again in Europe. Again, you know, it didn't default. It got 1.6 billion euros away yesterday, which has kind of been hidden in the news.
Look at PIMCO on the back of that, Simon. Look at PIMCO talking about bonds and saying we're in dire territory.
But, you know, isolated again, we're talking about sovereign debt coming out of Europe, and again, Europe being a major, massive customer of the US. And, you know, we saw the trade deficit gap widening just slightly also in the US as well. So interesting signals taken in isolation, but I think you've got to put all the pieces of the puzzle together to form a, you know, a rounded, well-balanced view.
Chris, and looking at the day ahead as well, Simon, you're really thinking that Asia's potentially not faring so well at the moment. We've got the China numbers coming out, the whole heap of the numbers will come out tomorrow, as Carson mentioned earlier. Our expert from China American Capital said he really thinks the key is the retail numbers. What do you think, and what's the potential impact for us here in Australia?
Yeah, look, a good and a big question, I suppose. And again, much like what's going on in the US and Europe, China's a lot of pieces of a larger puzzle. So, you know, you know, commodities lifting higher, even despite the fact that we're sort of getting, you know, speculation that Chinese demand's waning and cooling off a little bit. And mainly that's what we're expecting those figures to show us. But it's not disastrous. I don't think it's a bearish signal. You know, iron ore prices, for example, just come off their recent highs, isn't a bearish signal. You've got an economy there that's trying to shift gears on its economic growth plan. demand. It's trying to shift away from an export reliant GDP figure. I think 45% of the GDP is driven by exports. They want to get that down to 35%. They want to stimulate consumer demand, and they've got the tools to do it. You know, they've got the ability. They've loosened the yuan now. They can appreciate that to make their imports look relatively cheaper. Their exports look a little bit more expensive. They're trying to just tap the brakes a little bit on that unsustainable level of growth. They're talking about curbing lending and sort of managing their economy. It's certainly not disaster recovery, and I don't think there's potentially bad news if we start to see some of these figures sort of come off their peaks. Remember as well that a lot of Chinese data is very volatile. It's not unusual for us to see up 20% one month, down 20% the next month, and then, you know, revised 3 months later. So I think you've got to look at it holistically and look at them as pieces of a larger puzzle to make a well-balanced decision. Yes, I think Australia increasingly is becoming a lot more driven by Asia and by China than traditionally the US and the Euro, so it will impact our market, I think, today. But look, I reckon that optimism's contagious. I think we'll have a good day today.
I'm going to feed through briefly, gentlemen, into consumer confidence today. We did see the NAB survey yesterday taking another hit when it comes to business confidence overnight in Germany. That sentiment gauge is not looking rosy either, the ZEW. Does the RBA look through that? Does it look at the jobs market and say that trumps any fall-off in what you would say is a choppy print anyway?
Yeah, if I could jump in on the economic data front, look, consumer confidence 10-30 days is going to be all important. You know, having said that, we're all thinking potentially an optimistic day. I think they may sit on the sidelines until 10:30 to see what that figure shows us. We did have business confidence yesterday. Look, essentially it's moving sideways, and you can understand that we had a lot of negative news flow in the last couple of months. Consumer confidence may be a little bit contentious. I think it's going to be good. Look, I'm a positive, optimistic sort of bloke. I've been accused of being having a sanguine attitude on this very show, but of that I'm guilty. Look, interest rates haven't gone anywhere in the last few months, so consumers shouldn't be worrying about that. Jobs are aplenty, job ads are up, employment prospects are solid. No, the market didn't go down to 3,000 and something. The euros we've got left in our drawer from our last holiday are still usable. They're still worth something. Look, I think there's a lot of good reasons to be, at least at the same or a bit more positive. Just having said that, though, we have heard a tickle of some negative news in terms of sort of real living costs, things like gas and electricity. So that could factor a little bit this morning as well. So watch out for that.
Simon Mariner, thanks so much for your time from Aliom.